and welcome to another episode of the Corner Office Conversations. My conversations with leaders, founders, and CEOs across the ecosystem. Today, we have a very, very interesting guest with us, Nithin, Kamath. Welcome. Welcome to the Corner Office Conversations. And before we start, let me just tell our audience a little bit about Zerodha and about your background. Today, I think everyone who will be watching will know what Zerodha is. 4 million plus customers, contributing to almost 15% of the volumes on the stock exchanges. But it started a decade ago when Nithin himself recognized challenges during his experience and during his times as a day trader. And unlike most of us who gripe but just keep going, he decided to do something about it. So he bootstrapped and created Zerodha, and we'll talk about that in a minute, back in 2010-11. Since then, it's been an astonishing journey. And along the way, not only has he grown the business in a most disciplined way, it's still bootstrapped, by the way, but he's also created a fintech R&D lab, or a platform, I should say, in the form of Rainmatter, and now pursuing another passion of his, which is around climate change. And there's the origin now of the Rainmatter Climate Foundation, which we'll also talk about, because he's also now putting aside, some of his own wealth to really fund companies who are doing good for the environment. And to fund not just companies, but I guess other agencies as well. We'll also touch a little bit upon how much time he actually gets to play the guitar these days, or indeed basketball, which I know are some of your passions. So with that, a warm welcome to you. Thank you for taking out time for us today, and welcome to the Corner Office Conversations.
Thanks, Jaideep, for having me on this.
It's a pleasure. And I must start by asking, the most topical conversation these days is just how many unicorns are being minted every hour in India, and funding frenzy going on. But in the middle of all this, you gave out a series of very counterintuitive tweets, but indeed, they give us all food for thought. Where you spoke about Zerodha continuing to be bootstrapped, and how for you the moat was obsessive customer focus, and the freedom to really build the business as per your vision. Give us a little bit of your thinking around that before we move on to other parts. I'd love to get your thoughts.
Got it. So, firstly, why share it? I think I know a lot of founder friends, and I think there's a lot of pressure today because everyone's getting judged by how much funding they're raising or their valuation, right? As in, no one's really getting judged by the business that is being built. So, it's just not, it's just not the media. It's actually even friends and family, right? As in, typically the question is, oh, I'm doing a business, or what's the last round of valuation? That's the kind of conversation that's happening. And I think it's important to have another angle to all of this, saying, it's not, funding isn't really, means nothing actually, right? As in, it's probably just improves your odds of winning, and maybe just slightly as well. So it's important for folks like us to come out and tell that, you don't have to have a cut, copy, paste kind of a business model, and success isn't really always just how much money you raise. So that was the reasoning behind why I think I've been more visible on social media over the last couple of years, because I realized that as we have done well as a business, people value stuff that I say a lot more than they were doing it before. Right? No. And so it's onus on someone like me to come out and share our story about, like I said, about funding itself. Why not raise money? Like, personally, I believe before Zerodha, I used to manage people's money, right? Like portfolio management, and I used to hate the obligation that money brought on the table, right? And this whole having to pick up a phone call when someone calls you up, while you could be as rich as you want on this planet Earth, but if that obligation takes away that freedom, at least in your head of sorts, right? And I hated it, when I was managing people's money, and the first thing I did was actually return the capital when we made money for our customers. So personally, for me, I think I look at funding as an obligation. Right, obligation to the investor that whatever story we are selling, the story has to continue, and you have to continuously go and keep growing as a business. And this whole growing as a business is a very high pressure job, right? As in, it is, there are a lot of factors that determines your growth, right? You can't really, of course you can do, marketing and advertisement, but you can't really force yourself to grow, and which is what a situation a lot of my founder friends are in, right? Which is they're forced to grow year on year, and there's a lot of pressure on them to grow, and
market share in the respective segments.
Yeah. So I mean, that's my worldview, but it's not like that's the only worldview possible, right? As in today, yeah. But
of course, there are some businesses where you do need to build a consumer brand, and some of the global giants of today, forget the Indian companies, they were incurring losses and raising tons and tons of money for years before they turned profitable. So you're right; it's not the only view, but nevertheless, I think to my mind. You injected a dose of reality into the conversation that, funding will come and funding will go, but cash flows, revenues and profits are what really count in the long run. Which is a good segue for me to ask you. I mean, you started Zerodha because of the challenges you experienced yourself as a very active investor, in some ways as a day trader. And you were looking to solve a problem that you were facing yourself and seeing your whole community. Today you've got a huge customer base, massive volumes. But rewind back to the first 2-3 years. Where did the first 1,000 customers come from? What was that? Tell us a little bit about those days.
Yeah. So the thing is, I've always had this kida of sharing knowledge on capital markets, on trading, etc. So I was very vocal. In a pseudo form on a lot of online communities even before Zerodha. So I used to run a really large Yahoo Messenger group. I used to run some of the largest Orkut communities around trading and stock markets and etc. So there was a persona built online. So it's not Nithin, it was someone else, as in like a pseudonym, and who had a little bit of following, right? So the original, the whole attempt. This was essentially one of those all-in moves for us. Nikhil had joined. Nikhil is a better trader than I am, so he's my younger brother. So the bet was that he continues trading, and I go give a shot at building a brokerage firm for a while. If it doesn't work out, I'll get back to trading, and we will be trading under our own brokerage license, so we'll end up saving on trading costs. I mean, that was the thesis in which we started the business, and the first few thousand customers was I mean, like, in the business of money, getting credibility is extremely hard. And then especially when you say low cost, automatically people think, there's some scam around this, right? So it was, yeah. So the first few thousand customers were, I had worked in a call center for 3-4 years. So we did a lot of cold calling. I enjoy teleselling. Like, if I had an option to sell on the phone, I would pick up a phone call and try to sell, because being on video, in person, is very restrictive because you have to be in a certain way. But on a phone call, you can have your own different personas, right? And so we did a lot of cold calling. I used to call myself Sachin. So in the first 1 or 2 years, if people who opened accounts, even today they message and ask, can I speak to Sachin, and stuff like that. Sachin, because
was this just a random name you picked out here?
In the call center days, my pseudonym was Nathan. We were calling US, right? So
Nathan.
And Nithin became Sachin when I was trying to do cold calling in India, and I was I was representing Zerodha in a lot of these online communities as well. Because when we started Zerodha, right, I think a lot of people think what we disrupted was pricing, but it is actually more transparency. Because what traditionally brokers in India have done even now is that, based on your net worth, you get a different kind of a deal, right? So what we changed was we came and said that every single customer of ours, irrespective of how much valuable he is in terms of his AUM, etc., we're going to offer him exactly the same deal, right? Which meant that it gave us as a brand an opportunity to be very transparent and go talk about every aspect of the business online, right? And right, which is not possible for the competition because the competition had different deals for different people, so they could never really come out in the open and talk about it, right? And that transparency was there for the first time, and I think a lot of those first few thousand customers appreciated it, and but the first 2-3 years was tough. It was, like in every business, I guess.
I can imagine. But you, from what I've read and what I researched, there's a lot of these folks well, I guess there were a bunch of them who were themselves your sort of community of traders. But a lot of these folks were also first-time investors who kind of trusted in you. So one of the things that I'm always curious about. See, today when we read the statistics around equity market participation, there's still a preponderance of Western India, Gujarat, Maharashtra, as having the most number of demat accounts and so on. So what is it that you've been doing at Zerodha to actually also expand investments in the capital markets? And actually, as a subset to that, I'd love to get your thoughts. What would you like to tell our viewers? Equities as an asset class. I mean, last year's been unbelievable. But in a long-term perspective, real estate, fixed deposits, debt, what's your view?
Got it. Yeah. So the thing is, when we started the business, it was meant to be something else, right? It was meant to be for active traders to come trade at really low cost, right? And around 2013 is when we realized that this is a really shallow market. The market the number of active traders is a very small subset of the overall trading and investing community in this country, right? And by then we had realized that there is a business opportunity, right? To kind of build a platform for which is much bigger in terms of ambitions. And so the first thing we did was luckily for us, Kailash, who's our CTO, he joined us in 2013. And he's essentially the brain behind all the product and all the tech in the fintech. We actually joke and we call ourselves fintech because if we call him as K. So 2013 he joined. So first attempt to expand the market was Varsity, which is our education initiative. So we simplified all pieces of the capital markets. It is, I think, the second or third largest education initiative in the world today around capital markets, completely MOOC.
Right.
And in 2015, we launched Kite, our web and mobile platform. Now, if you look at our platform, it's completely minimalistic and it is not intimidating for a first-time investor to come use the platform. So I think one of the great things our tech team did was while they built a minimal platform, the same platform also caters to very active day traders and etc. So it has all the bells and whistles, but it's also not intimidating. Getting the right mix has been, I think,
seesaw balance, as it were.
Correct, yeah. And 2016 we launched Rainmatter because by then we realized only education is not enough. Only a simple platform is not enough. If you want to expand the market, maybe a WhatsApp, Uber kind of a moment should happen. And in a regulated world, the problem is regulation is generally very acts as a roadblock for people to innovate. So we said we have already solved for the regulatory issues. So here are a bunch of APIs. Why don't you take it and build on top of us, right? So you don't have to worry about regulations and all of that. Broking as a service, as you could call it. And then when startups came to us, we realized that they also needed some help with funding. So we started allocating, we started putting some money, to help them get started. And more importantly, I think what we gave these startups was a quick way to validate the product. Because like I said earlier, right, in the business of money, to get someone to trust your product takes a long time, right? You will probably go on a e-commerce like a dogfood.in and order dog food for 500 rupees. But you will not go to saveforlife.com and save for 500 rupees. Why? Because in your head, you're like, this is a long-term transaction. And what if this platform doesn't exist tomorrow, right? So all of these startups who partnered with us, we showcase them to our customers saying, these are companies that we are invested in. We trust them. We have tried this product. Why don't you check it out? Yeah. No, see, the thing is, if I had an option, I'd be in stealth. I would not be on social media. I think today's B2C brands can't afford to miss social media. It's just, you have to go create a brand for yourself. And I think it's important for founders and CEOs to do it because people associate people more than they associate a company, right? Especially, in a business like ours, right? As in,